Hi there, I'm Darren McDermott and you're watching Dukascopy TV. Now, unemployment rose by 5 million last year and this number is expected to increase to 13 million by 2018. I'm joined today by Ekkehard Ernst from the International Labour Organization. Ekkehard, welcome today.
Hello.
So looking at your most recent report, now it discusses trends. So we have a couple of graphs. Can you talk to us about them and of course the uneven recovery we are seeing?
Indeed, what we do see at the ILO is that the GDP growth has bottomed out in 2013 and we see a pickup of growth now happening at the global level since the end of last year. The growth rate will start accelerating even over the next 2 years, but in an uneven manner. We will see more growth happening in developed economies and a little bit slower recovery happening in emerging markets. What does it mean for the global unemployment rate? We will see that if you look at the next chart, that unemployment will continue to increase mainly because of a rising labor force at the global level, but at the same time the unemployment rate will stabilize at 6.0% this year and will then slowly decrease by 2018. We see bigger decreases of unemployment rates in developed economies, a little bit less pronounced decreases of unemployment rates in emerging markets, and that's why this unemployment rate will stabilize at this relatively high level at the global level. What does it mean for the global jobs gap? We see that since the crisis, basically there is a huge gap that has opened up in comparison to pre-crisis trends. And unfortunately, the recovery is not strong enough to bring us back to where we would have been without the crisis. So we will see that there are still around 60 million jobs missing from the global labor market, and these jobs are unfortunately not coming back because the recovery is not only uneven but not strong enough. Now, what would happen if, for instance, we see a new euro crisis coming up or housing market bubbles bursting in countries like China? We will see that global growth will substantially be lower than we forecast for the moment, and that would mean that we have to expect additional 2 to 3 million unemployed per year under this downward scenario.
Now, Ekkehard, vulnerable employment is actually expected to reach 48%. Now, self-employment is included in this. And in the UK, we've seen a huge rise in self-employment. Now, what sort of impact has this had on the economy, and where else are we seeing a huge rise in self-employment like in the UK?
Well, self-employment in a sense of vulnerable employment is certainly not a matter of choice, but a matter of obligation for these people who select this type of employment, which means that often enough they will earn much less than if they had been salaried employed. In the UK, it's often a situation where long-term unemployed decide to go back to basically find employment for themselves, and that means that the wage growth, the earnings growth, which will be much less pronounced. We see most of the increase in vulnerable employment actually happening in developing countries. In developed economies like the UK, it's much less of a problem. It has become a problem recently with the crisis, and this is certainly a matter of concern because it means that many more people in developed economies remain vulnerable and remain in a state where they don't benefit from any recovery happening.
And looking at the US, we're seeing a lot of positive news, a huge pickup. But with this, are we going to see a rise in wages?
Well, in the US, the discussion is now really focused on inequality, on battling inequality. And the labor market certainly allows wages to rise faster than in the past. The question is, how can we achieve this? One way of doing this is by fostering or by promoting more redistribution from high-income earners to middle-class and low-wage earners. That is certainly going to happen in the US. There's a debate there, and it's a momentum that has picked up. We will also see rises in minimum wages. There is certainly enough demand now for people at the lower end of the spectrum that will allow larger increases in wages for this type of employment.
And just wrapping things up a little bit, what sort of policies need to be implemented to tackle the employment and social gap?
At the ILO, we have been insisting, and I think this recommendation is still valid, that there needs to be much more done in terms of promoting aggregate demand, which is to say that monetary policy has to stay very relatively accommodative. In the euro area, actually, monetary policy could do much more. They could still lower their interest rate. They could do more in terms of buying government bonds. And in addition, we need to stimulate the economy through much more aggressive fiscal policies. This can be done basically to implementing more public investment. We see there's a huge investment gap in Europe, and this needs to or could be tackled by much more aggressive fiscal policies. Basically, we need to pump in more money in the economy. Otherwise, we will not see a closing of this employment and social gap that we have observed over the last 5 years in Europe.
Ekkehard, thank you very much.
Thank you.
And thank you for watching Dukascopy TV. Now do stay tuned as we have many more interviews heading your way. See you soon.